Well, good morning. So I'm Kevan van Velzen. I'm with the AER, and I'm going to talk about the Mine Financial Security Program this morning. Two things going to do, just a quick overview of what the program's all about, and the second then about the transition into the AER and the relationship with ESRD on the program. So the overview of the program. What is the Mine Financial Security Program? It's essentially a security collection program designed to incent ongoing reclamation in the simplest terms. It applies to coal mines and coal mines with the infrastructure related to it, and oil sands mines and all the infrastructure related to the oil sands mine on the approval area. What is it trying to achieve? The MFSP, or Mine Financial Security Program, takes a comprehensive approach to managing liabilities. The essence of it is quantifying the assets, which are based on the revenue that can be generated by the resource in the ground for the mine, and comparing that to the liabilities, which is your suspension, abandonment, remediation, reclamation cost for all the infrastructure in that area, including the mine site itself. It requires regular reporting and appropriate reporting of that information to the regulator. This is an annual cycle. There's, of course, the requirement to report the ongoing reclamation progress for that, and security collection, which I'll talk about a little further on when it's triggered and why. The MFSP replaced a previous program by the ESRD that was essentially a full security program. And the intent of this program, instead of trying to collect full security up front and tie up that capital that then can reduce the potential for energy development, was to say, well, let's collect the security when it's needed, when the risk is presented. So really that's about then trying to have security in case the approval holder doesn't meet their obligation and the government has to step in the very unlikely event, and using that capital to maximize resource opportunities. The approval holder, they're responsible for the suspension, abandonment, also known as decommissioning when you're talking about the facility side, the remediation and surface reclamation of the site, and maintaining the care and custody until reclamation is achieved. Key thing on this is they need to have the financial resources to meet those obligations. And those resources are based on what can be produced as revenue from that mine site, not the entire organization. There's 4 mechanisms, and these are the mechanisms that trigger security collection. One is called the base security deposit. What that really is, for existing mines, was the security held under the previous program. And for new mines, there's specified amounts, which I'll touch on in the next slide. There's the asset safety factor. This is a comparison of your liabilities, the cost for the end-of-life work, and your assets, the revenue you can produce. When that ratio is 3 to 1 or less, security is required to bring that ratio back up. And this is intended to make sure there's always a balance between collecting security and ensuring there's some protection in case in the unlikely event of a failure occurs. Operating life deposit. This is based on mine production and reserves. The mine produces so much per year. The reserves is quantified when that ratio of how much is left versus how much you produce per year reaches 16. Security is required, and that's paid over a 10-year span. So if the mine's done a lot of reclamation over the time, that amount is lower. If they haven't done as much or they couldn't do as much, that can be a significant amount of money paid over the 10-year span. By the end of that 10-year span, so 6 years before end of mine life, full security is paid up based on the estimates, and that also is then working to balance the risk to the public versus making sure that the capital can be spent for resource opportunities. And finally, the outstanding reclamation deposit. This is just about the plan, the reclamation plan for the mine. If they're keeping up with the plan and the goals, you don't pay a deposit. If you fall behind, there's a charge of $75,000 per hectare. And if you catch up with that, it can be refunded. So this is all about trying to incent. It's not about collecting the money. As I said just a minute ago, so security requirements, new oil sand mines, $30 million for a brand new mine that has not had an approval, and $60 million if you've got an upgrade on the site. That's what they call the base security deposit. For coal mines, in the simplest terms, it's based on the calculated disturbance to begin with, and then as infrastructure and other development happens, the security is adjusted each year. And for the existing ones, the ones that are in the previous ESRD program, all the security that was held transferred over to this program. And as based on the triggers I just talked about, if any of those are hit over time, if you fall behind a reclamation, the security will change over time. Key dates. I only put 2 here. One is March 31st. I won't go through the details on what it means in terms of what you have to do, but if you're an approval holder and you want to use one of these mechanisms, you have to have the submission in by March 31st. Then the regulator will look at it, review it, provide the approval to use it, and then you can use that in your annual submission. Second key date is June 30th. This is when the annual submission must be provided, and if there's any changes in the security, this is when the approval holder also provides that. So the transition to the AER, which is happening on proclamation, which you've heard David mention, is the 29th. The program is going to be managed in two ways. The AER administers the program. As Tristan said earlier, this is policy assurance. We do not control the policy of the program. We administer and manage the program. So that's about the submission reviews and approvals. The security, conducting audits. This is an audit-based program. And the annual meetings and 3-year review, AER will be working with ESRD. ESRD is the lead on these things. In terms of program and changes, ESRD owns it. They control the policy, and if any program changes are happening, they'd be coordinating with the Policy Management Office to do this work. And as I said, the annual meetings and 3-year review, this is going to be led by ESRD with AER involvement. Transfer of security. The security has actually been transferred over just a few days ago. They actually went up, picked up the letters of credit, and they brought them back down. The cash that was held, it's not a huge amount, typically for coal mines, has been transferred into a bank account, and it's held for each individual approval holder. This is not a pool of funds. This is an individual one. The transition, the letter of credit, will stay in the ESRD format. If you hold one of these things and you understand the complexity of changing them, you'll appreciate, let's do this over time, let's not change them now. And there's an agreement, if in the unlikely case we ever needed to have a letter of credit cashed, that ESRD would cash it on behalf of the AER and provide the funds. Within a certain amount of time, about a year, we're looking to have all the letter of credits then adjusted to reflect AER as the beneficiary. Acceptable forms of security. You're thinking, well, he just had this on the previous slide, but why repeat it? The key thing here is AER has already been approached by certain folks that are in the program and said, can we use a different kind of security? The suggestion is performance bonds. The policy from the GOA, Treasury and Finance, there's 2 forms of acceptable security, letters of credit and cash. So just want to make sure that everybody understands that. The amount of security held is approximately $1.3 billion, a substantive amount of money. The thing to remember on this is not a pool that you can use for every mine. If an individual mine happens to fail, only the security held for that mine can be used for that mine. This is not like the orphan fund where it's backstopped. So the link with authorizations, as you probably all know, if you're going to need an authorization, you get one under APIA, as these gentlemen talked about, and then you're going to get one under either the Oil Sands Conservation Act or the Coal Conservation Act. The link with the MFSP is to the authorization under the APIA. Come into the AER, do your application. At some point down the application, you're going to be advised that, yes, you're going to need security for a new approval or authorization. The security collection is done just before the end. So you don't tie up security before that, but you need to provide the security and get the approval under the MFSP prior to the authorization being issued. In fact, it can't be issued without the security. So that's how it links in. Information. There is a web page being set up on the AER website. It's going to have the MFSP guide, the standard, and a bunch of other pieces of information that the folks that are in the program need to know and find it. We've also set up a single email inbox called the MFSP submissions at aer.ca. So all the questions, any annual submissions can be sent there. It's again trying to consolidate and coordinate. Audits. Just a quick overview. This is an audit-based program. Annually, the industry approval holders will submit their submissions. And the level of audits are quite simple in terms of how they work. One, you get the submission in, compared to last year, nothing much has changed. Thank you very much, you're done. Now, level 2, questions are asked about the submission. They go back to the approval holder, they provide them, and answers are provided, you're done. Level 3 is somewhat more complex. These are actual staff-led audits between the AER and Alberta Energy. They go onto the site and look at the financial information that is used to prepare the submission to the AER. And level 4 is a third-party audit. We actually go out and hire professional auditors, like a PwC or an EY, and they will do, to the audit standards, evaluate the financial information used to prepare the submission and ensure it's done in compliance with the guide. Last year, there was a couple of staff-led audits conducted, and just late last year, we completed the first third-party audit of the program. Well, of an approval holder in the program. Program review. There's an annual review that's part of this program. It's been delayed. The transition has caused some challenges on getting it done, but the go forward is it's going to be rescheduled once it's transferred into the AER, and we're going to talk to the approval holders to figure out the best time to do that and get on with it. The program is also scheduled for a 3-year review. This is to look at how the program is working, what can be changed, clarified, improved. That is also an outstanding item, and again, in the annual meeting, the intent is to sit down, discuss, and figure out when's the best time to hold that meeting. Just for fun, the Office of the Auditor General is also auditing the program. This program was created as an Auditor General recommendation dating back quite some time. They're actually auditing right now, and any recommendations or findings that need to be followed up will no longer be with the ESRD, they'll come over to the AER for follow-up. Same thing on the contact side. The contact information is the same as the previous slide. For emergencies, don't think that's going to happen in the MFSP. The best way is the email or the general phone number that was provided second in there. There's also the web page on the site about the Mine Financial Security Program. And that's it. Thank you.